Welcome to the Greenleaf podcast, where we go into the nitty-gritty of real estate. A lot of times we were talking about operational points, but today we have a new deal. We're calling a bundle.
Very
the Dollar
excited.
General bundle.
Very exciting today. This is my favorite day of the month for new deals.
Dollar General Day?
Dollar General Day. Oh, Dollar General Day. Yes. So today's Dollar General Day for bundle one. Here we go. Let's do it, Dave.
Yeah, so we have a bundle of 3 Dollar Generals that we're looking to purchase right now, and we have a unique angle that we kind of see right now in the market, and we want to go over just what we're seeing, why we're taking these actions right now, what the investment looks like, and then we'll dive into the locations as well.
It sounds great. So like the first premise is like, why in the world are we focusing on Dollar Generals right now? So
well, right now, it's been interesting if you look at the public markets, right? And I mean, we're real estate investors, but we're also always looking at what the public markets are doing. And Dollar General stock dropped about 30% in the past 30 days. So it took quite a big hit. And a lot of the reason behind that was looking at their earnings forecasts and how things were going. And revenue, same-store revenue is only up about 0.5%.
right. And remember, these large companies, they operate quarter by quarter, and every quarter, all of the analysts give them a different sort of perspective. And one bad quarter then gives
you're
them
going to take a hit.
You're going to take a hit, right?
Yeah.
And I will say this is some of it's fear-based. And when people have fear, what do?
Yeah, they're going to leave.
They leave and they sell.
But if we look at Dollar General's earnings report and how it went, the concern is really around the consumer or the Dollar General consumer facing economic challenges. They're saying, okay, it's going to be a tougher market for them. And that's kind of, inflation has been a very hot topic, and that's been something that everyone's talking about, is it's going to be harder for the consumer. So that really hit Dollar General stock really just with that sentiment. They had slower earnings. They had slower revenue growth, but they had slower earnings. Their net income went negative slightly.
Right, but let's talk about what happens when Dollar General stock goes down. People get less excited about Dollar General, and what happens to the real estate owners of Dollar General real estate?
Yeah, owners are going to get nervous.
And they want to sell it because they just do that. Yeah. And
so it really creates a perfect storm.
Right.
The stock pricing that we saw over the past 30 days, it's going to take some effort for that to come back. 30% is quite a drop. But if we look at the factors going on in real estate right now, coupled with the public market situation, we have a great opportunity to buy these things. So 3 things that are really happening. Public markets, we talked about that. Leverage is still really challenging to get. So, the 50-point drop from the Fed that happened earlier this month, yes, that's a positive sign. However, it doesn't mean that banks are all of a sudden willy-nilly lending money all over the place. And it is still challenging to get a loan, especially for something like a Dollar General that's only $1 million. It's a hard loan to really get across a bank right now. So that makes challenges right there, right? So that's 2 main factors that are leading into it. And when you look at that, you've got a holder of current Dollar Generals that's like seeing some signs of all, and they're nervous and they want to sell. So that creates a buyer's market.
Maybe they've made some money already and they just want to get out and say, okay, this is enough for me. But then there's opportunity too in that space. And when interest rates are going up, always remember that when interest rates go up, property values go down. So this is back to the perfect storm. It's creating a perfect storm for a buying opportunity. Now, what that also means is we do not buy with leverage.
Right. So to make this easier, our position is really that if we can go find these things that are in the high 8 cap rates, we're buying stuff at a cap rate right now that we haven't seen in 10 years.
Yeah, actually, it was 2012, I think, is when we looked at it. So 12 years.
So we'll put that chart up too. It's
2 charts we're going to put up, but one chart is the buyers and sellers market thing. And so right now, our premise is that we are at the absolute bottom of a buyer's market. Yeah. And so the buyer's market, there's kind of 3 stages. You're kind of going down. You're buying it when the prices are going down. Prices are at the very bottom, and then prices are going a little bit up, and you could buy at one of those 3 points. And right now, our belief is right now we are at the absolute bottom because the bottom is basically shown from interest rates, and interest rates really are going to drive prices going back up. And so as soon as interest rates tick back down, prices will go up, and we've already had the first tick down. And so over the next...
If it keeps ticking down more, it should drive the asset values back up.
Right.
So we want to be buying on that upswing. And right now, the leverage is still challenging, so there aren't as many buyers in the market. And then therefore, we're looking to acquire these with no debt. Saves us a good amount on the transaction cost up front. Average purchase price of a Dollar General is just under $1 million. So we're looking to do 3 in this transaction. We foresee more bundles like this being available and more in coming up. But right now we'll be able to buy 3 deals and not use any leverage on it. So it's all really just a direct
Right.
cash flow to investor position.
And remember, we said this before, but it's very important to realize that we're buying these things at like 8.5, 8.8 cap in place revenue. Have we ever at Greenleaf bought something with the 8.8 in cap
No,
pro
I mean,
forma,
this
not
is,
even pro forma revenue, actually in place?
yeah, this
cap
is a
rate?
unique opportunity that,
Right, right,
that will last probably for a couple months.
right.
And then we foresee 3 to 6 months from now, interest rates, if they're lower, these cap rates won't be around anymore.
right. And our, just for history, our past Dollar General exits were all in the sixes.
Yeah. So if we can buy in the 8s and sell in the 6s as rates come down, we'll be in good shape.
That's a home run.
So-
Yeah, that's a home run.
So let's talk about let's just talk about these 3 locations and what we're looking at doing here. So we have gone out and found opportunities that we think are good because we're buying locations. We've talked about this before based on foot traffic, and we even got cell phone data on this current one.
Right. So
Right.
there's a whole funnel we put these Dollar Generals through. So there was roughly about, in September, there were roughly about 700 Dollar Generals for sale. We put them through a funnel of where are all the high cap rate Dollar Generals that were for sale. And so from that 700, it narrowed down to about 200, I believe. And then from that 200 of high cap rate deals, we said, okay, of those 200, which ones are cheap rents? And so then, and then so that and narrowed it down to, like, I think we got down to 100 or something, plus or minus 100 or so. And then after we went through cheap rents, we also said, okay, which one of those with cheap rents are in the top 33rd percentile of foot traffic? So which ones of these Dollar Generals perform better than us, than
Yeah.
66% of all the other Dollar Generals that are available right now. And we did a little side project too, where one of the favorite companies we have right now is Placer, and they give us the foot traffic data. Placer, we did a little test with them, and they gave us some credit card data. And not only do those Dollar Generals rank really well on foot traffic data, they rank really well on credit card transactions too.
And
so
that-
we are buying the cream of the crop Dollar Generals.
Yeah, and that is our essentially our hedge, our analysis. The benefit of what we think we're doing is we're picking stores that we can get the best idea of their profitability, knowing that Dollar General has 19,800 stores, 20,000
Right.
stores. We want to make sure we're buying the best ones.
And if there's ever a closure risk, the closure risk is not going to be on a $7 or $8 square foot rent Dollar General. Closure risk is going to be on the $15 or $18 rent Dollar General square foot.
Yeah, we see, the risk we really see is ones that are underperforming on a revenue standpoint, or the rents are just way too high where you have rents approaching 20% of sales. So we need to see rents that are lower, and then we need to see strong sales. So as long as we do that, we know we're going to get a location that is a strong performer, and we should have a long-term tenant because of it.
And these are all very stable cash flow deals. All of our investors are getting checks every quarter. They're in place revenue. We 2 of them are double net, and one of them is a triple net.
Yeah.
So the triple net one is super easy because there's nothing for us to do other than make sure Dollar General is doing what they should do and complying with their lease. And so very easy.
So these 3 locations, so we mainly focus on the Southeast U.S., right? That's where we've bought a lot of stuff. And from there, we've also ventured, we've gone up into Kentucky. We've done stuff in Virginia. We've done stuff in Texas. So we've got a wider footprint, and we're really looking for the sales number, the population of the area, and the rent that they're paying. So those 3 metrics are really what we're using to pick a location and make sure we're getting the best ones. So these 3 ones, we've got one more that's in Alabama.
Brantley, Alabama. That's the first one we have in our bundle. Second one is in Brownstown, Indiana. I visited that one personally, and that was a fun one to visit. It's literally it's in the middle of a town, and I was there for a couple hours, nonstop traffic. So just even visually, you can see it's a very busy Dollar General.
It's interesting to look at the Dollar General maps when you get to the grids that exist in the Midwest and the West Coast, where you can see a highway that goes all the way across the state, and you just see the dots of all the Dollar Generals on that road.
It's pretty amazing.
When you get to like an older city, Atlanta, they're kind of like all over the place in the area. But the Midwest, you can see that they've just got dots along every highway in every little city along the way. And the last one is in Piedmont, Missouri. And
Piedmont,
Katie went out and
Missouri.
saw that one.
Yeah, Katie went out
Right.
and saw that one. Mark did Brantley, Alabama. So we just so you know, we do personally visit all of these. We do the inspection with the inspector, and we are very clear on what we are buying and what the good parts are, what the bad parts are. We are buying buildings that are going to have very little capex, if any capex. All the capex right now we're pushing off to the current owner. Piedmont is, of course, our triple net deal, so there is no capex on that one, of course, because
Yeah.
it's Dollar
So
General's
so
responsibility.
Piedmont, we're buying at an 8.8 cap rate.
I think Piedmont
Maybe?
might be the lower. It might be the lower one because that was
Yeah.
a triple net one, but they're all 8.5 to 8.8 cap. But I mean, never in Greenleaf history have we bought Dollar Generals
Yeah,
for
no,
this type
these
of
are
cap rate.
a unique point in time where we think we're getting a really good deal on these. And Brownstown is 8.8 and Brantley's 8.65. So we got good deals out of the gates with good cap rate, and we feel like our analysis and really our homework on it has shown that these are going to be good performers.
Right, and so honestly, these also have different sort of lease terms right now. So remember that we always talk about when is the asset worth the most. The asset is worth the most when it has the longest lease. And so Brownstown, we're going to have a lease renewal next year, and so when we get the lease renewal, we'll have the rent bump. And so next year, when we get the rent bump, we could either keep it for the cash flow, or we could sell it for hopefully
Yeah.
like a cap rate in the
We-
6s or 7s, and that would be one of the three. And then the other two have longer term leases, and so those would be more of a traditional like 4-year hold. And it's all remarkable. And you know, the cap rates historically, we'll show a chart of this, but cap rates for Dollar Generals have historically over the past 20 years, you know what's happened to them? They basically
It's constant. I mean, but they've followed interest rates just having a constant drop.
Yeah, so over the past 20 years, if you show a trend line, they've just literally gone down over the past 20 years
Yeah.
forever. And then there's a little tiny blip you'll see right now. And then, of course, that'll be a blip that goes back down, too. And so we're
Yeah.
literally
That's our
buying,
thesis.
that we're
That's our
buying them,
thesis that it's going to go back
we're
down.
buying them on the blip. And
We-
you can see on the graph where how the trend line and how it's an amazing,
Yeah.
it's an amazing.
So the investment plan here, like we said, we're buying these 3 deals. We're buying them with no debt. So we're going to go in all equity on these 3. We'll close them all within really like the next 45 days. That'll happen. And then as we operate them, we want to make sure that everything is maintained properly. Even if it is a tenant's responsibility in a triple net deal, we're still going to manage the property and operate it so that everything is done accordingly with what's in their lease. And then from there, we've got 2 options. We have potential to refinance these in the nearer future. If interest rates go down enough that it's an attractive position to refinance it, we could do that. The other option is that we just sell them outright once interest rates have dropped and cap rates go back down. So those are really the 2 outcomes that we foresee happening, and that's what we're going to do. But mainly, we're buying these. We're generating day one cash on cash return distributed to our LP investors from the first quarter
Yeah.
that we close.
So this is about as reliable a payment as you'll ever get from the retail properties with the double net and triple net leases are the most reliable payers, and they're the most consistent and predictable payers. So
And we've lined up all these deals so that they're all going to close right around the same time. The investment here is into the bundle, so you get a little bit of exposure to all 3 of them. And yeah, we plan to close over the next 45 days here with all of these. So if there's any questions on these, you want to hear more about our Dollar General thesis and what we're looking at, we'd love to talk more. So please let us know.
Yep.
But thanks for watching. We are excited about this bundle going out, and hopefully have another update here shortly once we close all these things out.
this is the one I'm excited about. So this
Yeah.
is the most excited I've been about a deal all year, just so you know. And so happy to talk to anybody about it who wants to learn anything more about the Dollar General bundle.
Cool. All right. Thanks, everyone. Appreciate it.